All right, time for a look back at this day in history, December 11th, 2008. Bernard Laurence Madoff, the investment advisor who promised stellar returns, to A-list clients, all while defrauding them of more than $19 billion, was arrested and charged with running history's largest ever Ponzi scheme. Pulled out of his Manhattan apartment building in the morning hours, the arrest would officially unravel a multi-year scheme where Madoff used money from new investors to repay older investors, in some cases creating false trading records to cover up losses and non-existent investments. Now, much of the government's case was actually based on Madoff's own words to colleagues and family members about those business practices, so much so that Madoff, just 3 months after his arrest, he pled guilty to fraud, money laundering, perjury, and theft. In court and later in interviews from prison, Madoff insisted that he actually ran a genuine investment business for years before finding himself unable to maintain the returns his clients had come to expect, and that, he said, is when the fraud started. Now, it's impossible to verify that claim, but we do know that Madoff did indeed oversee a legitimate market-making and prop trading business out in the open on the 18th and 19th floors of that red cylindrical lipstick building in Midtown Manhattan. But it was on Madoff's private 17th floor office, off limits to most employees, where prosecutors said most of the fraud took place. Madoff's big-name investors included folks like then New York Mets owner Fred Wilpon, actor Kevin Bacon, and even activist Elie Wiesel. But unlike Charles Ponzi, a seemly character whose 1920 con made his already tarnished name synonymous with investment fraud, Madoff for decades held a level of esteem on Wall Street that really belied what he was doing behind the scenes. His early business ventures back in the 1960s and 70s, that actually led to the push to take the over-the-counter pink sheet stock market and computerize the dissemination of quotes. It was technology he effectively invented, that became the foundation for the creation of the NASDAQ in 1971. In fact, Madoff served as chairman of the NASDAQ in the early 1990s. And his fraud, quite frankly, it might have continued on if not for plunging equity markets amid the crisis in 2008 that prompted his clients to seek more withdrawals than Madoff had the cash to accommodate, almost to the point that even the deftest sleight of hand would have had little impact at all. In July 2009, Madoff was sentenced to serve 150 years in federal prison in North Carolina, where he died about 12 years later at the age of 82.